Arjun, Amazon putting its flag in the ground, along with what we saw from the likes of Apple and Alphabet, that it's faring okay. It explained the increases in prices away down to better content coming to the platform. But, you know, if you think about how the investors view this at the moment, they want to see companies that have pricing power in this type of inflationary environment. And Amazon demonstrated it has that power.
You're absolutely right, Karen. That's exactly what Amazon did. And I'd argue that for the earnings report, it was really that $20 increase that was the star of the show when it comes to Prime. And just back to Steve's point as well earlier, you know, Amazon feels the confidence at this point in raising the prices for Prime. And if you think about it, you know, a few years back, Amazon really was nowhere near the quality of content and offerings that Netflix had, but it's invested very heavily over the past few years in content, not just original content as well, but sport as well, which has become a big area for Amazon. You've got the huge multi-million dollar budgeted Lord of the Rings series coming up later this year. On top of that, it's music, it's books, it's the fast delivery as well. So Amazon feeling at this point is confident enough to be able to raise those prices and for people to stick with the service and draw in new users, which of course is very extraordinary. And I think that was really key to pushing those prices higher, as the share price higher in after hours trade as well. But of course, there were some other bright spots for investors as well. AWS, always a key focus for the market coming into Amazon's earnings report. It was closely watched, revenue in at $17.8 billion, but it was that growth rate up 40% year on year, one of the fastest quarterly growth rates we've seen in a long, long time. And again, you are seeing Amazon take advantage of that trend towards digitization, more and more businesses becoming digital, looking for cloud services. We saw that strength as well mirrored in the reports from Alphabet and Microsoft when it came to their cloud division as well. And for the first time, Amazon broke out its advertising revenue. This has always been seen as sort of a side business for Amazon, but it's not small. It's $9.7 billion business in the quarter, and that was up 32% year on year. So again, giving investors a bit more clarity into this business, which is growing quickly. Amazon now the third biggest digital advertiser in the US. So again, very strong. Now that was enough. Those three things, I think, for investors to overlook some of the more negative points, that big drop in operating income because of the higher costs, as well as the slow revenue increase, up 9% for the quarter overall, one of the first single-digit growth rates since 2017. So those three things, cloud, advertising revenue, and AWS, Karen, really enough to drive that share price pop in after hours trade.